Now, on to today's market movers with easy to follow futures and options trades.
Welcome to Market Movers. I'm Jim Urio, and we are days away from the biggest data point of the month, and that's the unemployment numbers. We're looking at using weekly E-mini S&P options as a means of either hedging risk or creating additional exposure. Joining me is Chief Investment Officer of Kingsway Asset Management, Scott Martin.
Hi, Jim.
How are you, Scott?
Good intro.
Good, thank you very much. Now, 2 out of the 3 of the last jobs numbers have been decent beats. ADP was a decent beat. A lot of other numbers have been beat. Is this going to be a beat?
Yeah, I believe it is. Now, what the market does with it is obviously the $64,000 question, because you've got the Fed backdrop, you got trade talks, you got other economic data, like you said, Jim, which has been coming in, I guess, a little bit hotter than expected. So does a beat in the ADP number, which I believe, again, think it's going to happen, does that actually translate to higher stock prices?
That was the question I'm supposed to ask you.
Well, I'm asking you the questions for once.
I think it does.
Come on.
No, I actually think it does. I think we're at a point where the Fed has convinced us that they're not going to overreact and they're going to be gradual. We heard from today. That's what I think. Thoughts?
I agree, too. And I think this is a market, Jim, that's becoming more and more confident and comfortable with the new Jay Powell Fed, which is a good recipe for higher stock prices.
Amen. Now, before we dive into our trade discussion, I'd like to point out, with all market movers, it's important to view these as examples that allow you to see different ways to use futures and options products to either manage risk or create additional opportunities, not as recommendations or advice. Prices and movements will vary. Scott.
Yeah, so listen, we talked about the Jay Powell Fed, the backdrop of the interest rate hikes, the recent meetings that have talked about maybe being more dovish and whatnot. But, Jim, looking at the S&P 500 and seeing it round out some of this downward move that we've had in the last few trading sessions, it looks like there's some opportunity, I believe, in the charts, and specifically the options on the ES. So looking at buying the week 2 August 28.25, 28.50 call spread. It costs you about 8 ticks to put on, or about $400. It expires August 10th, so you got a little bit of time here for this to fill out. Risk the 400 it costs to put on to make a potential 850, because if you look at that range that we've established in the last couple weeks, that 50 level seems to be about where the S&P likes to bump up against. Therefore, I just need a call spread to fill out the 25.50.
Okay, you actually, I like your trade better than mine.
Thank you.
And the one, because we looked at it, the underlying was trading about 28.13 when we priced that. So your tick is yours is only 12 above where the market is. You have 10 days. To me,
pretty
I like
good risk
that a lot.
reward,
Pretty
too.
good risk
Yeah.
reward. And the reason I looked at this trade was because of the risk reward as well. I'm looking at buying the week 2 August 28.50, 28.75 call spread for 2.3 ticks, so a lot less than yours. But this is a 25 tick wide just like yours. It's just the strikes right above it, so less likely to happen. But if it does, there's a greater risk reward. So you risk $115 to make a potential 11.35. Thoughts?
Yeah, it's
you don't
nice.
like it.
No, it's not. I do like it. In fact, I would almost look at it as similar to mine in the sense that there is a nice upside expression. Now, here's the thing about your level that you highlighted there. If there's a move above the 50 there, you're going to see a nice explosion above, I believe. I mean, if you get some upward momentum with some good economic data, maybe the jobs number Friday does it, you're going to see that call spread that you just expressed, I think, do really well.
Give me the one greatest hurdle for the stock market right now.
It's the Fed, still. It really is. And the fact that, yes, we are getting more data from Jay Powell as far as more information, but the Fed is always still a wild card, especially as they're new.
I agree with you. I think they're convincing us that to be more relaxed. I think tariffs are a secondary thing, but I agree with you that it's the Fed. Thanks for joining us on Market Movers. I'm Jim Urio, where we are helping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.